For nearly a century, humanity's relationship with money has been defined by the fiat system, a monetary structure managed by centralized banks and governments. The system conditions us for high debt, rapid consumption, and a constant fear of inflation. Bitcoin is not just a technology, it is a profound philosophical tool that dismantles this conditioning, offering a path to true financial sovereignty, fundamentally rewiring your psychological relationship with wealth and time. First, the shift from consumption to accumulation. The most impactful change is the shift in time preference. Fiat currency, like the US dollar, is designed to be inflationary. It constantly loses purchasing power because central banks can print an infinite supply. The system creates a high time preference. You are incentivized to spend your money now because it will be worth less later. This encourages debt, short-term thinking, and a culture of immediate gratification. Bitcoin enforces a low time preference. Its supply is mathematically fixed at 21 million. It is an asset designed to become more scarce relative to increasing human productivity and the expanding money supply of the fiat world. Saving Bitcoin is a deflationary act. It teaches you to defer consumption. The wealth you save today will likely buy more later. This fosters patience, planning, and a builder's mindset. Your motivation changes from frantically trying to keep up with inflation to calmly accumulating a scarce resource for the future. This profound shift can radiate outward, encouraging better health habits, better career planning, and more stable relationships built on long-term goals. Our traditional relationship with money is one of trust and subservience. We trust a central bank not to inflate away our savings, and we trust commercial banks to hold our funds and allow us access to them. We are customers who need permission to use our own wealth. When you use Bitcoin and hold your own private keys, this relationship evaporates. Bitcoin introduces financial sovereignty. You become your own bank. Your wealth is secured by military-grade cryptography and is completely independent of any bank, government, or third-party custodian. No one can confiscate it, freeze it, or inflate it away, provided you secure your keys. This is a monumental psychological shift. It reduces the endemic anxiety associated with financial crises, geopolitical instability, and central bank mismanagement. You move from being a vulnerable client to a self-reliant sovereign, a transition that profoundly increases your personal autonomy and sense of control. Traditional fiat money is inherently national and controlled. It is subject to capital controls, censorship, and the whims of local political regimes. For billions of people living under oppressive governments or in nations with hyperinflation, their savings are a volatile political football. Bitcoin is borderless and permissionless wealth. It is the same asset whether you are in a first world country or an emerging market. This universal accessibility makes it a powerful tool for human freedom. For those facing currency devaluation, it is a life raft. For political dissidents, it is a censorship-resistant way to receive funding. Your investment in Bitcoin takes on a new meaning. You're not just accumulating wealth for yourself, you're participating in the construction of a global, neutral financial layer that offers monetary justice to the world. Your personal wealth becomes a globally fungible asset, breaking down geographical constraints on your life choices. Fiat money is fragile. It is subject to single points of failure like the central bank, the printing press, and the banking system. This fragility forces a frantic relationship with money where you are constantly trying to hedge against the next crisis. Bitcoin is anti-fragile. Because of its distributed, decentralized nature, it gains strength from attacks, censorship attempts, and market crashes. Every time the network survives a stress test, it proves its resilience and increases its fundamental value. Understanding this robustness allows the Bitcoin investors to view market volatility not as a threat but as a temporary state. This anti-fragility spills over into a relaxed, confident relationship with your wealth. You stop chasing speculative returns and focus on the slow, inevitable growth of the hardest, most secure asset available. Your money becomes a solid foundation, not a volatile liability. Of course, none of what I said in this video is financial advice, and it's all just for educational purposes. If you enjoyed this video and you want more no BS videos about Bitcoin, make sure to like the video and subscribe to the channel. Thank you for watching, and I'll see you in the next one.